All right, guys, welcome back today. Today is Sunday, and you're watching the fair value gap strategy that I'm showing you guys to help you guys find more fair value gaps, trade fair value gaps better, or order blocks. So the first step is I have it in the Discord here for free, which is free Discord. You can all join. There is a chart gallery filled with tons of value, my steps to get into a trade, order block section, fair value gap section, and each section has tons of chart galleries and images filled with examples of how I trade every single week. Like here, right now, this is a setup. Um, this is a setup I had. This was an order block trade, not a fair value gap trade. As you can see here, my entry here was on that order block there, or that demand zone. You can look at it as demand. Entered there, and if you look at most of my entries in the Discord, most of them have a wick. And the reason is because when smart money is tapping in, when you're trading with the institutions and the banks, hedge funds, let me explain to you what order block actually is. Order block is an engulfing candle like you see here that I entered off of. Two large engulfing candles filled with large sums of capital. And that capital, since it's so large, creates an expansion in the market, and that expansion actually takes out highs and lows, and it creates market structure and moves the market. And these order blocks are created by institutions, hedge funds, and groups of individuals that have millions and millions of dollars worth of capital to trade with. And that's why. So when there is volume in market like this, I wait for the block to be formed, and I enter off of it on the pullback. Because like you guys know, like I trade, that's how it works. Because when there's a market expansion and when there's volume in the market and the market expands, what happens? The market goes, this is expansion. When a market goes up like that or down like that, and then when the market expands, it doesn't just keep expanding forever. It goes down for a pullback or retracement, and then it continues expansion. And the key is to enter. I'm going to say it every video until you make money, is to enter off of that retracement of that expansion. So when you're entering off that retracement of that expansion, that's what I did here. And I entered on the bottom of the expansion, because the bottom, sorry guys, sometimes it freezes up like that. The bottom of the expansion is where the move in the first place began. The move began at the bottom because that's where it expanded from, hence the demand, right? I entered at the bottom where the order block was. So, yeah. There's Euro news tomorrow that's happening, and that's the first step. Identify the news. So the first step you're going to do is identify the news on Forex Factory. That's what I did, and there's Euro news happening all day tomorrow. I typically don't trade news when it's happening all day because it increases your likelihood of getting um, stopped out. I usually like to trade when there's news and then it ends at, let's say, 10 a.m. or even 11. But since it's Euro, I trade that pair a little differently, so I trust Euro more. That's the only pair I trade after 10. Most pairs I do not trade after 10 a.m. For this pair, there's news tomorrow. I know the market's going to move. All I'm doing right now is analyzing the trend / I'm just doing my market analysis. So I like to go on the 45-minute time frame. I'm gonna go on the 45-minute time frame, but first I'm gonna go to the 4-hour time frame. And the 4-hour time frame is the time frame that I use for my major trends, my major time frames, my major long-term trend. So the first thing I'm going to do is I'm going to identify my market structure / my trend. So I'm going to take my tool here, and I'm going to do like I say in every video, zoom all the way out like I'm zoomed out now, and then move price action to the left so you can see what's relevant. So our current high is here, and I'm going to color it black, and our current low is here. Current previous high, previous low. This is how you do market structure. You can just keep marking it up like this. And the reason I'm not focused on internal structure in here within these black lines is because it's irrelevant when you're zoomed all the way out. Zooming all the way out allows me to see the highs that are shaping the market structure. Thus is the long-term structure / the most relevant structure. So I'm going to zoom and continue zooming out. And I'm going to keep doing my market structure. So it was clear to me right here, based off what you can see here, that we were bearish, right? We were bearish, and then because we had market structure all the way here, come from a high point, made a range. It came from a high. I'll show you. It came from a high point. I just want to get rid of this stuff on the screen. I hate when you just tap shit on TradingView. Like you have the drawing tools and stuff, and you can't delete it. It gets on my nerves when there's just a bunch of shit on the screen. Okay, so do that. Delete. All right, so our expansion started here. Our drop. We had its market expanded. Then what did the market do after it expanded? It came down, came back up with this wick, and retraced up to here. And this can be on a different time frame. Traced up to that gap. Then it came back down. The market expanded downwards from that point. Then the market came back up, and it came back up, expanded again to fill in this gap right here. Market dropped. Then market expanded up here. Looks like it was about to break out, but it was only tapping into that gap again before expanding downwards. And that's all it does. It expands, then it retraces, expands. The market retraced right here, right? The market came down here, consolidation, expansion, filled in that retracement, that gap. And you could have actually traded this right here if you were trading here. Some people would have traded that right there. Hold on, I'll show you what I mean. They would have traded this right there, that expansion, because we had consolidation down here. We had consolidation down here, right here. In that consolidation, you can think of it as energy coiling up before. Then we had an expansion, and then price came back down and filled in that gap to that expansion before going up again. And depending on where you would have targeted, you could have made a profit there. There we go. Yeah, some people would have traded there. I wouldn't have traded there. I would have waited for my confluences. Market came back down. Then, right now, we have potential for the market. I think it's going to be bullish, and I'm going to show you why. So we have the market right now. We were bearish, but we have highs slowly and lows. We have no newer lows, right? So our low here, this low here that I had the blue arrow pointed to, was not broken yet, because we had price come from, and we're on the 4 hour. We had price come from this low back up. And when it came back up, it broke a structure right here. And then now it's coming back down, and it's not breaking a new low here. It didn't disrupt this new low. It came back down here, and then now it's going back up with an expansion. The expansion itself is here, where I just drew the box. That's the expansion. And our high and low is here. But if you notice, our low isn't lower than here. So if it was bearish, it should have broken this low and continued there before retracing back upward and continuing downward. This lets me know that there's a potential for a reversal. And the fact that we have price coming into the expansion now, which is where current price is at now, and is currently going upward, and if it takes out this high right here, then I can look to get into a trade. But if it doesn't take out that high right there, that lets me know that we can continue going downwards until getting into a gap or an order block right here. There's a gap right here, and there's also an order block. I'm going to go for the order block and just have it there. The order block right here, remember what I said? 2 engulfing candles, large sums of capital injecting money into the market, which is, you can look at as demand. There was capital right here. The market was right here, came up, made this order block by institutions, and then this order block created expansion, and that expansion knocked this high and took out this high. So yeah, that's pretty much it. I'm going to wait for the market to come down here, and when the market comes down to this gray box, I'm going to wait for a reaction on the smaller time frame. And if it doesn't come down and breaks above here, I can just enter there. It's not a big deal. This is why I like my strategy. I'm patient before I enter, so then I can actually have the choice of freedom of my entries. So yeah, this is pretty much it for the video. I hope you guys liked it. I'm going to make another one later. Peace.